What's up, investors? It's the Russian dude, and before we talk about how Elon Musk was able to save Tesla, right here are 3 interesting things in under 20 seconds. First of all, on your screen you can see the upcoming earnings report, so feel free to pause the video if you have any companies of interest, so to see if they're reporting this week or not. Next you can see the fear and greed index on the stock market and on crypto market. On stock market right now is approximately neutrality, 45 out of 100, and on the crypto market it is showing as greed, mostly greed, with 67 being out of 100. And finally, right here you can see the graph which shows that a third of all the tradings, of all the trading volume which is done on the stock market is done in the last 10 minutes before market closes. Very interesting, I found it myself, at least personally. Right, now let's talk quickly about how Elon Musk was able to save Tesla. Basically, he recently went on a business trip in China where he met with Baidu representatives, and he, long story short, struck a deal with rolling out the autonomous driving technology of its Tesla in China, which is without a doubt the biggest car market in the world. As you can see from this video, a lot of Chinese business people along with government representatives were present during this business meeting, which shows that China as a country is extremely interested in this technology, and these negotiations were very serious. It was not just like whether they're gonna do it or not, they are doing it, the question is when. As a result of this, Tesla stock closed at up to 15.31% at the closing market. Our next major topic of today's video is why American budget, 12% of it to be specific, is spent literally on nothing, on thin air. And to make you guys understand the reality of this whole absurdity, first of all, once again it is worth mentioning that most likely the high interest rates by the Federal Reserve will be kept at a much longer time than originally expected. It is also expected that during the next Federal Reserve meeting, Jerome Powell will not decrease the interest rates, and most likely he will say that the number of interest rate cuts this year will be minimal, if any at all. This meeting is supposed to happen on May 1st, so guys, it is pretty much very soon. As you can see from this next graph, investors also start to think that the central banks of the world, of other countries, will follow, at least the majority of them, will have to follow the example of America, so they will also not reduce interest rates prematurely. And this next graph of swaps show that there is possibly only one reduction cut of the interest rates in 2024, as you can see right here. Our next picture is definitely worth your guys' attention. Bloomberg was basically using the artificial intelligence technology, which was analyzing approximately 60,000 finance and investment related articles since the beginning of this year, just to show how the sentiment on the market was changing. In the very end, in December of 2023, Jerome Powell, whenever he said that guys, we will start reducing the interests very soon, this gave a very big boost to the stock market, especially to the optimism of investors. And then whenever the inflation stopped budging, whenever there was not that much response from it, whenever all the activities, whenever the hard policy was not doing much, the sentiment started to change drastically. And then now, as you can see from this graph in the very end of it, on the right side of this graph, most likely Jerome Powell, according to, once again, artificially intelligence analyzed 60,000 articles, most likely it is also expected, the very same thing we've been talking about just now, that he will not cut the interest rates. Most likely they will stay longer, and maybe there is not going to be cut or reducing the interest rate in 2024 at all. And if you remember in one of my previous videos, I was already telling you guys that as soon as something like this starts to happen, a lot of smart people, banks, investment advisors, they will start to revise their prognosis about how many times they think the interest rates will be reduced in this year. At that moment, in that video, I did say that as soon as the narrative will start changing, these people will start changing their predictions. Guess what? This is exactly what's happening right now. One of the very first banks, BNP Paribas, they already re-evaluated quote-unquote their prognosis for 2024. Now they think that there will only gonna be one interest rate reduction in this year, so in case this happens, which most likely it will, this bank will seem like they are a genius. And well, you already guys know that high interest rates, first of all, they reduce the economic activity and they severely affect different sectors, such as for example the technological one. But there is another major problem, the US debt maintenance, which is you can guys think as you're making your credit card payments. America obviously has a debt, so they have to make, let's call it like this very simply to understand, monthly payments. And the higher the interest rates are, the higher these monthly payments are. And so according to this graph, as you can see, by 2025, just in cost of debt maintenance, it can reach $1.7 trillion just in maintaining the US debt alone, without even repaying it or anything, like just maintaining debt alone, just the interest payments, which according to this graph already right now is already representing 12% of the US budget, 12% of the US money, everything goes just to service the debt. This, guys, is a huge number. I mean, some countries in the world, their entire GDPs do not even equal that much as the US debt service alone, which basically means that America literally wastes this money on nothing for buying thin air. But whenever everything seems absolutely horrible and awful, it means that there are some good investment opportunities right now as we speak, we just don't see them yet. So let's talk about one particularly unusually interesting one, at least just for this 2024. And just in general, some signs that the stock market is not doing maybe as bad as some people think. And to begin with, right here is yet another interesting graph, which shows that the majority of companies' earnings reports, they do beat the expectations, but the majority of share prices of the very same companies, they do lose the value after these earnings reports are released. Well, it kinda does not make sense, right? Why the share prices go down when everything is good with the company? But that's exactly the case. If the company is doing financially good, if they do provide a good outlook for the future, but the share price goes down, this simply means that some people just decided to lock in their profits, reducing the share price. But if you do truly believe in this company, this does not stop you from buying more shares because, once again, the company is financially healthy. Next, we have another graph which shows the short interest of the S&P 500 and Nasdaq 100 indices, and as you can see, it is almost at the bare minimum levels. Which basically means that investors, both retail and institutional ones, they are no longer seeing opportunities to extract profit from shorting the market. They basically don't see it going much lower than it is right now. And another interesting picture is the cash on the balance sheets of the companies. As you can see, it is going up significantly, and one of the first reasons why companies would do this, it is because they save the money to do buybacks. They do see that their share prices right now are pretty low, opening them pretty good opportunities, so they pile up the cash. So they're preparing to do buybacks, and this at least artificially increases the prices of the shares in the near future. Another reason why companies would want to stockpile cash on their balance sheets is to simply prepare for some economic uncertainties, which might not, to be honest, be the case particularly in this moment because the inflation is pretty high right now, so them just keeping cash and doing nothing with it means that it just simply loses value over time doing nothing. And here is a very subtle graph that not too many people talk about it, but thankfully guys you're watching as Russian Dude Investing, so you're gonna see the information that it's not available to many people. Right here you can see that the hedge funds are buying technological sector shares for 11 days straight, which has literally been one of my major topics of the entire last week, that right now technological sector is extremely oversold, prices are getting extremely attractive, and there are very many good opportunities on the stock market right now. The hedge funds already realized it, and they started to pick up these unjustifiably low prices, shares with the low prices. But right here is even more unusually interesting investment opportunity for 2024. But before we proceed, guys, please once again make sure to not make any investment decisions based on this video. All the information I present just for research and entertainment purposes. Please make your own research before making any investment decisions. The reason for this video is to stimulate and to motivate you guys to find your own investment ideas. But here we go. Right here we have a graph of the prices for the natural gas, and as you can see, for more than last 30 years it has been the one and only support level of approximately $1.7, which as you can see was never broken. As soon as it touched these levels, the prices for natural gas started to go up. 100% guys, you cannot base your future decision based on past performance. This goes without saying, but just think about it logically. The share prices can go down to zero. The bond prices can go down to zero as well, simply in case if the company becomes bankrupt, right? But prices for the natural gas, at least personally, I do not see them going down to zero. The government will simply not allow you to get gas for free. I mean, it makes sense, right? The government will simply not pay you to turn on the gas stove in your house, so eventually gas should cost something. And this cost right now is, at least according to this graph, is at minimum levels. And whenever it is at minimum levels, whenever the economy right now is struggling to recover, the stocks, the securities are struggling to recover, once again, guess what is the potential investment opportunity during these times? Something what is more safe, considered by investors, either fixed income securities, bonds or treasuries, or commodities. Natural gas is a commodity, the prices are extremely low, and I guess you can already put 1, 2, 3 facts. You can piece them together, so you can see what I'm trying to imply right here. And so yes, as always guys, thank you so much for watching. Please subscribe and like this video if you didn't find the information useful. Be careful, invest, and see you next time.